Let's take a little bit of look at the market, maybe map out some of these symbols from the watch list solution made over the weekend. If you guys didn't catch that, he was live streaming over the weekend building the watch list. We have the swing trade list, and then we have the day trade list. So that's what we're going to be, just get ahead of the game a little bit. Doesn't take very long. Map out some of these, kind of get some idea of what we're looking at. These levels, jump out to the weekly time frame and just mark out a couple spots. Candle close, wick ends. You don't want to just fill it up with lines, but a couple of key candles can give you a heads up of where a market could reverse. One of the things that if you're unsure and you're thinking, you just got a bunch of lines everywhere, bring up your volume and see where the volume was really big on a candle that you're about to mark. So if I turned on the volume here and we'd be looking at, say these 20, 30 candles, we'd want to elevate the candles that had the best volume in it and highlight those with our lines. And that way your support and resistance is not just based on where the week started or where the week ended, but also on the market participants. One thing that I keep hearing in my head that really bugs me is somebody said, well, if you draw enough lines on your chart, price is bound to hit one of them, kind of implying that it's a waste of time or that it's, I don't know, silly or something. It's something I can't get out of my head. It's really bugged me for a while now. Don't let that creep into your head and think that you shouldn't do it just because if you draw enough lines, price is bound to hit it. Have some reasons for why you pick the spots that you do. Try to stay consistent in your build, and you'll get to a point as you grow as a trader to where you're not even thinking about it. You're just automatic. Kind of the way, if you see Dan, the way he runs through his charts, there's no hesitation in what he does. It's like watching Trend Spider live when he's in there building his support and resistance zones and drawing his trend lines. It's completely automatic to him. It's like he doesn't even think about it at all. And that's the way it should be. But you got to kind of grow into that and have your own rules for why you're doing what you're doing. We all start out just following what somebody is explaining to us, but at some point, we have to modify it and make it our own. But just stepping out into the weekly, taking a few moments to draw these lines out can really give you a heads up of where price is more than likely going to get hung up, at least pause temporarily. And the reason I like to do this is because if you're already in the trade, say you're going long and price suddenly stops and starts to pull back, we're always trying to answer that age-old question, is this a pullback or is this a change in market sentiment? Well, if you can identify that there was some overhead of resistance from the weekly time frame that it hit, you're now not so inclined to bail out of a trade just because it's pulling back. And instead you have that understanding of, oh, I hit this major level here. Maybe I'll watch it and perhaps not bail out of a winning trade. Of course, there's always going to be times where price runs right through your lines. It's just the way that it goes. There's nothing wrong with the idea that we can be wrong. The main thing here is just getting the perspective where price has the potential of getting hung up. we were talking a little bit about Fibonacci this morning. And I gotta tell you, when I first started trying to learn Fibonacci, I was really disappointed. Everywhere I went, somebody was telling me how I had to do it. They were telling me how I had been doing it all wrong, and that if I didn't do it the way they were teaching it, then I was still doing it wrong. And then I would go to this other place and I'd watch another video, and that person would be telling me something completely different than what the first person told me. And they had all these rules about, oh, don't use it intraday, don't uh, pick from the middle of the price structure, don't do this, don't do that. You always need this. You got to. It got to the point where they were all in complete and utter disagreement with each other, and that was disappointing to me. So when I went in and started building my own rules, and I made my own video on it, I had one rule: be consistent in how you analyze and how you interpret your Fibonacci. Since nobody knows how the darn thing works, science to this day can't explain why it works. We just know that it does. But nobody has any reasons for why it does what it does. So how is some person who probably has no idea how to even form the calculations for the darn thing going to tell you that you need to do it one way or another? Just stay consistent in how you use it. That rule should carry you a lot farther. And I've used it intraday. I've used it in long-term patterns. If you can teach yourself to trust your analysis with Fibonacci, you will get ahead of the game. One way that you can gain some trust in that is using the right edge. It's one of the greatest tools that you could use, and you can do it on almost any platform. If you continue to test and back test and test again that Fibonacci until you not only trust it, but you respect it and you grow to love it, it will increase your trade potential. Something's wrong with my unit here. Come on. What's wrong with this thing? Hey. Google Chrome sometimes surprises me. All right. Quite a bit of news on different markets over the weekend. Mergers, acquisitions, upgrades, downgrades. Remember that this is a Fed week, and we anticipate a lack of market participation during the week. That doesn't mean that we can't trade anything. It's just you got to be aware of the fact that there's a lot of people who just won't trade on a Fed week. The gap up list this morning. Try to weed these out as we get going. You know, I've been playing around with Firefox for a bit. I was taught in my Microsoft engineering classes that running different browsers, especially at the same time, is just killer on your computer. And so for the longest time, I literally only used one browser. But things have changed since I got my degree. I got to admit, I got my Microsoft engineering degree back when Windows NT 2000. Damn, that sounds old. But what I do now is I actually choose one browser and then I load it up with all my different uh, links and favorites. And so with Firefox, I've been loading it up, putting in all my saved links and just really setting it up. And I got to admit, I haven't had any problems out of Firefox at all. I haven't tried to do any streaming yet from with the Bullish Bears, and that's going to be the final test. But I've ran through, my links in here, and I haven't had any problems. So I'm getting close to the point where I'm about to test it, probably Wednesday, and see how it goes. Yeah, Windows NT lasted for a long time, but I've kind of gotten away from it. I'm still really, I'm not, what's the word I'm looking for? Disappointed, I guess. When Microsoft 3 years ago was talking about coming out with this major upgrade, and then they didn't. And when they were asked, what happened to this massive upgrade we were hearing about? There was leaked, and they said, yeah, well, we do have some really amazing stuff, and that leak is unfortunate because we weren't ready to present it to society yet because we really think you're too stupid to use it. That really disappointed me. They're hanging on to something, and they think that society is, their words, too stupid to use our product, so we're just going to hang on to it. Of course, now with all the new satellites up and switching over to 5G, maybe they'll finally come out with it. Secretary Perdue just said, I do not believe the tariffs will be implemented on December 15th. Well, he didn't just say it. I'm a few minutes old with that. For some reason, my alerts didn't trigger. So we've got a pretty decent list to look at this morning, and I'm not going to be running my futures grid the way I normally do. If you guys haven't seen it, you take the futures and lay them out in a 4-port grid like this, and then you set your AD. You can detach the AD, and you set each one in the corner so that you can watch the flow for the first 30 to 45 minutes, the money flow. I was looking at the scanner earlier this morning, and it was live and working. Maybe it has gone down since then because I haven't been over there in 15 minutes, but it's possible. if you guys hadn't caught this, and it's a little subtle. It's kind of interesting. Lucian added this streaming ticker from TradingView. Caught that over the weekend. I think I've seen that. I don't know how long it's been there. Like I said, the changes are subtle, which I like. I like that the changes aren't like glaring in your face, but there's always changes to the website, always updating. And 12/9/2019 trade ideas scanner gappers. So is that not what you're looking for, or am I missing something? So if you haven't seen how we do this, go into Market Watch, visualize, set the watch list to one of the 4 indexes. I got to admit that the Dow Jones is the easiest one to start with when you're beginning to analyze market breadth like this, because there's only 30 stocks in it. But using the S&P 100 would get you the farthest in the way that all 4 of the markets correlate. But you can detach this screen, and then you can set it on your 4-part so that each one of your 4 indexes have that AD, and then you can watch it looking for bullish divergence this morning. Since we've faded down from Friday, we're looking to close the gap at least before doing anything else. Basic gap 101. There's no rule that says we have to, but it's what we anticipate. The gap isn't too large. So over the weekend, I got a couple emails from people who were looking for things to trade, and I sent them on a quest to kind of get more comfortable with the Dow 30. And when it comes to options and playing PD, probability distribution, you really can just kind of go through this list. It's a great place to start. They're all mega cap companies. I've spent the last 3 months studying on the way that the institutional firms out there trade probability distribution and not taking directional positions. The prop firms that have been getting wiped out in the last 24 months are the newer companies that have popped up trying to change into directional trading, and for a while it worked. Now they're just getting slaughtered. checking the news one more time before we get rolling. Yep, there's a reason that the institutions that have been around the longest are still around. Trading non-directionally has all the advantages. It doesn't pay out as good as directional, but your P&L shouldn't look like this chart right here. It shouldn't have those wild fluctuations and swings with highs and lows. That's not what your P&L is supposed to look like. It should probably look a lot more like an Apple chart or something on the daily time frame, right? It should look something like this. Guitar, you probably want to just go through and watch it again, because in my day trade videos, I said very explicitly that you should only take the amount of time that you need. That's the way that I trade options on an intraday basis. So I always, always, always use the closest expiration possible. And if that means 0-day options, then I'm taking 0-day options. And then I choose my delta selection for the strike prices depending on how many days in the expiration. I don't give myself days if I'm day trading. Seriously, day trading to me means I'm going to day trade that thing. I have no intention of holding on to it if I'm wrong, hoping that perhaps it'll come back around. No. So just take the time, watch it again, watch it a couple times. But remember that how any of us trade is based on the way that we do things, which is why Creed is different than me, and Dan is different than both of us, and Lucian and Angel, and on and on and on. There's not a wrong way. There's just the way that I do it, and it's been successful for me. Yes, that's one of the mistakes that most people make with a small account. First of all, small account options trading shouldn't be done with day trades. That's just straight out the gate, number one. But they think, well, it's options and that's going to give me leverage, and I got a small account, which is why I'm playing with options, and so I'm going to try to grab the cheaper strikes. That's a bad idea. You're handicapping yourself and taking strikes with bad Greeks because it's, quote, what you can afford, when in reality, if you can't afford the right strikes, you shouldn't be doing it. So when you go in and you look at the options chain, if you're going to day trade, you don't need more than 1 day because you're going to day trade. So save your money on the premium by not taking the 2-day, the 4-day, or 7-day. You're also going to be more profitable in a 50-cent move or a $1 move if you take the front expiration versus something farther back. And then as for the strike selection, somebody goes in here and they looks and say, well, look, I could take 4 of these $23 ones, or I could just take this $93 one all by itself. I want multiples so I can fade. Well, I'm going to take this one. You're handicapping your position before you even get started. Is it wrong? No, but it's not the best way to do business. So if you can't afford to get the right one, that means you can't afford to trade the strategy. Look at a smaller market, or look at a different strategy. BF. Alibaba was something that got my attention over the weekend. I'm interested in keeping my eye on that. Hey, Hollywood. I haven't seen you in a while. Have I just been overlooking you in the room? 5-minute warning, everybody. 5 minutes. Aha. A lurker. I get it. X steel is something that was on my mind this weekend. X steel, USO, Alibaba. Three things I was looking at, and I almost put a post on TradingView on X steel. We're sitting at a real great pivotal moment. This is one of my go-tos, especially later in the week. Talking about being balanced right on the edge. It's right at the roundy. This literally could go any direction. What I'd like to see out of this thing today is a break back above this $14 range and then a retest sometime in the week to validate the new range above $14. On that retest, I'm looking to go long with this in a 30-day trade. At the moment, I'm interested in just waiting to see if we're going to come back down and maintain this box that we've been in or not. We had our fake out breakout, but now we need to see the legitimate breakout and then come back down and validate that $14 from the top side. So I'm really keeping my eye on that X steel. Although I'm not a big fan of trading gap, it really is the most popular day trade strategy out there. And if you haven't taken the time, I recommend, if you're going to day trade, studying all the material that you can get your hands on the different ways, the tactics and styles and strategies that go to trading a gap. Me, I would much rather prefer trading the open range breakout, which also has a ton of different styles and strategies to it. It's been more comfortable for me, especially since I don't need to trade at the open. I like to get a little bit of price discovery before I jump into the market. But the gap is impressive. The historical accuracy on trading gap just really blows your mind after a while. Hey Dan, how you doing, buddy? I was talking with somebody over the weekend who had done a really great job of figuring out everything that they're not good at, which I was impressed. But then they didn't have a solution on what to do with it. You really got to be able to take a look at what you're doing. And journaling your trades, guys, doesn't have to be a book. Even if you're just taking a picture of what you trade and drawing out your notes on it, even just something as simple as that, give yourself something to review so that you can increase your target profits. To me, that was the number one benefit from trading is I make more money. That ought to get your attention, right? If somebody says if you journal your trades, you can make more money, that should get your attention. I'm in it to make money. And if I can find ways to make more money, I want to do that. I've seen that Ameren had a new commercial over the weekend, and I've been hearing them more and more on Bloomberg, well, on XM radio. It'd be interesting to see what they've spent for media. They actually had a gold medalist in one of their commercials. It's just the little things like that. In fact, TradingView now has fundamentals that you can add as a part of your charting analysis. So it looks like we're headed up to close the gap. You see the NASDAQ broke right out the gate. really pushing to the upside. That's tech, by the way. So finance down here, the Russell. COF had news over the weekend, a double upgrade. So interesting what we could get out of finance today. The S&P seems a bit soft at the gate. So at the moment, we're looking at small caps and tech. Here we have the sectors. One of the strongest moves in these sectors right now is XLB. That'd be your materials. Consumer discretionary, XLP. So for that, when I see moves like that, I want to take it over to Tesla. Not looking to trade Tesla, or not Tesla, Amazon. Not looking to trade Amazon, but watching Amazon. It becomes our indicator when you see consumer discretionary moving like that. Should get your attention. Dan's calling out Fate, high a day. Morning score. Looks like X Steel is pushing into that support. That zone at that 1412. Well, my thinkorswim just went like in slow motion. So out of these gap downs, Nokia has almost closed the gap. 3M. Creed's giving a shout out on TVIX. Let me just kill that chart there. So we had a question in the room for ULTA. Had some long wicks pushing against that roundy at the 258. So from its earnings, it really had a lot of volatility, and then it just came back down, and it's really trying to resettle. Not sure what you're looking to do with this in a day trade or a swing trade. More often than not, when I get asked to look at something the way you just asked me, it's because somebody's already in a trade. It's not working out for them, and they're wondering what to do with it. So you got this price structure right here. Seems to be holding. Come on, thinkorswim. Oh, you dog. It seems to be holding. This is where it validated the range like we was just talking about on X Steel. Seen a move, looking for a new move in X Steel where it goes up, breaks the range, and then comes down to validate before continuing on. So this set a high, pulled back, set a new high, pulled back. It's validating this range here. We're looking for a continuation in this. Not necessarily looking for this to break and fall back down. At the moment, that's the thesis. So the alternative thesis would be that it fails to maintain this support, breaks through this level, and tries to come back down here, close the gap. Another call out in the room is for Apple. And remember that if you're looking to trade, it's going to move like the market, and the market's going to move like Apple. That is correlation 101. So Apple is consolidated at this new range. And when we look left, we've got this price structure here at the 269. If you're looking for a trade on Apple for a long term, recognize that it set a new high. You'd be looking for the pullback, the validation, and then the move up. You don't yet have those. You don't have the validation. You don't have anything yet. All we have is Friday's price action, which if we took it in isolation would just be an island and we'd be looking at a reversal. All right, so until this validates the range and proves that this is the new reality for Apple, we don't have anything to go on. Right now, we're looking at an inside day. We've got our engulfing candle, and we've got today's price action contained inside of it. Oh. Has a high right at the 271. Gotta love those roundies. What end of the week trade on SPY are you talking about? Oh, it's still loaded from last week. Awesome. Wrong one, though. Now that the market is open, we can't run the one that says after hours. Got to run the one that is made for live market, regular trading hours. Man, my Thinkorswim is just a dog today. Try to shut down my multi-charts to see if that helps any. Well, while that scan is scanning, we had a question about AMD. So we had this 786 fib level, which is right where my box is. And it didn't hold that support at all. And in fact, gapped down, broke through it, just crash and burn. But the crash and burn was still analytically perfect. It fell back down to this price structure, bounced off of it, came right back up again. And what we're looking at here is we're still maintaining that 786. We hadn't even got close to the 618. And we're looking for this to work its way back up at least into the 100. Not sure what you mean about entry. You pretty much can take this anytime, anywhere. You could literally come out at your lunch hour if you're looking to swede this thing, taking it on the idea that this is a bullish trade in a bullish market. And even with a 30 to 60 to 90 day trade position, you do it with a spread, limit your risk. The only concern that I see here is you've got earnings on the 28th. That's far enough out that you could easily get paid in multiple spread strategies. Before this had gapped down, my thesis last week was that this was going to come down, test the 786, and rally back out of it. It did that, but it also broke through and fell down lower. If you put that on with the rest of the market, I'm pretty sure that the entire marketplace reacted similarly in correlation. Still looking to see this maintain the 786 and come back up to $41 or more. On the intraday, you can see these price levels, these pivot points, these rejection areas. And what we're looking for is a soft rejection, price coming up, making contact with those areas, pulling back gently to consolidate, and then moving up higher. What we don't want to see is price come up, hit one of those areas, and fall completely back down like this. That's a hard rejection. Or like this morning, we hit that 39.70 range. This pivot here took a hard rejection, and we're going right back down to the open. So AMD has got an open range built. One of my favorite trading strategies. There's your box. Bank of America asked about in the room. This is a product I keep on my day trade list. Like I said, COF had a double upgrade. One of the reasons I like to trade finance so much is you can correlate them into different boxes. And when credit is moving in the same direction that banks are moving, then you can go in and just jump onto the XLF. This pulled back to structure, bounced on it perfectly. That line was already there. Same here from Thursday. Looking for a move up. Watch the overhead resistance at the quarter, 33.5, 33.75. This price shelf is going to be your resistance. The indexes are moving in sync, getting a healthy pullback in the Dow and the Russell. There it goes. You want to see them all move together. This is trend trade day. You should not be using range trade. Question about Microsoft. I am in a Microsoft trade. Want to point that out. When I'm in a market that I'm going to analyze, it's fair to you to let you know I am in a trade here in Microsoft. I've got two credit spreads on. Way down here. And that's because I put them on way back here. Thinkorswim. Back here. Microsoft broke right through Friday's pivot, Friday's high. This is a breakout signal. When you see the market break above the previous day's price action, there's all kinds of triggers and alerts that lets other companies know, because it's an entire trade strategy. brings in market participants. Trend trade, so we'd be looking for a good clean pullback, maybe to support, which would be yesterday's price action or the Fibonacci. More often than not, they'll be the same. Pretty close. 2 pennies off. You should have a trend day trading strategy or a trending trade strategy and then a range bound trade strategy. I don't like to trade range bound personally, but I still have a strategy to do it. That's when you sell into strength, buy into weakness. That's a range bound market. On trend days, you take flags and breakouts. You don't fade. Microsoft is up almost 0.25%. So looking at the sectors, we've got weakness in the industrials. Healthcare and utilities are down. Everything else is looking okay. There's weakness in energy. We're looking really good otherwise. Just recognize that even here, like in the financials, they're looking strong, but they're just trying to get back up where they were Friday. All right, so consumer discretionary on the frivolous side, that'd be like your resorts, cruise liners, luxury. It's doing good. XLB came out better than it was. That's your materials. Not too bad overall. Notice how much the bonds have given back. They've really pulled back quite a bit. I'm a little concerned with the Dow. If we put all 4 of these back up and look at them in unison, it doesn't matter. This pivot point and this pivot point in the Dow concerns me. Notice that the NASDAQ is well above all of those ranges. And the S&P well above those ranges, those 2 pivot points. And in the Russell, again, well above those pivot points. But the Dow is not. The way that these 4 move in percentages are typically very close to being equal. So on a day that the S&P moves 50, you would anticipate the NASDAQ to move about 120 and the Dow to move about 250. So while these 3 have broken above these pivot points and the Dow has not, this is concerning. We've got 15-15. It's a 50-50 advanced decline, but there is more bearish money coming in or being recorded than bullish money. So the outflow is greater than the inflow. That's in the Dow. S&P, you're looking at a 60-40, and the money flow is not 60-40. The money flow is 3-to-1 positive. So 60% of the S&P is moving up, but the money flow is 3-to-1 positive. Here is the massive move happening in the New York Stock Exchange. You can see that we had a clean break across 2 indexes and above the zero line, and it is in accumulation. The other 3 indexes did settle off their lows and are moving up, although not nearly in sync. This is cumulative money, looking at the market breadth overall. We want to see those markets move in sync. Bank of America took that soft rejection right into the price structure, getting a fade. Oh, Creed, I think it's looking for a 10 a.m. funny, bud. That's what I think it's looking for. A 10 a.m. funny. This is exactly what Tom Busby talks about a lot. And if you haven't noticed that I bring his name up a lot, there's famous chartists or people that are known for technical analysis, and the guy is an industry standard in the business. So I could tell you, that Bob from down the street had talked about technical analysis, and it probably wouldn't give you a lot of confidence in what you're listening to. But when you hear about something from one of the biggest names in the industry who's been around since before options were invented, you kind of got to give it a little bit of weight. And what he talks about when a market breaks out is being comfortable enough in your position to wait for the test. So we got the breakout here. It got rejected at the top, pulled back to structure. It's validating the breakout. It's looking to confirm that this is going to be the new reality and that it's going to move from here upwards. So far, it's confirming that. It pulled back to structure. The structure held. We're looking for it to continue on from there. It's healthy, good, clean price action. It's exactly the same as what you saw here when we were inside of this range. And it broke these highs, this pivot point, pulled back to structure, validated it, moved up. FTSV 47 Incorporated. What a move this thing, huh? It's up 60%. And notice that it's already faded back from the highs, $4. And it's still up in the 50 something percent. That's an amazing move from $14 to $26. Now, I hear all the time from people who say, oh, how come I couldn't have caught that thing? You never see it coming. Well, is that true? You can build watch lists looking for things that are forming these patterns. And you put a drawing on there and you right click and you set an alert and you give yourself a heads up. And then when you get your break, you put on the trade. Now, nobody could have known that this thing was going to break $8 to the upside like that, but that a up move was anticipated? Yeah. Why not? Notice the levels that it didn't hold. That price shelf there. And now we're looking for just below that 20 for something else that could hold. It's an impressive move. what we didn't get out of this thing is a handle in this cup. A tiny, tiny little handle, to be sure. Dan giving a shout out on TGTX. Remember that when you're looking at anything that is therapeutics or bio or any, you can go to FinViz, and for free you can look for things that have drugs in the pipeline to be approved. You can get approval numbers. You can get all kinds of things. That post that I just did was not what it was supposed to post. That was old. It's supposed to be this LL. Depending on what you use for scanning, you can actually scan for put call ratios, open interest, top ETF option volume, option activity, volume leaders, unusual option activity, elevated volatility, subdued volatility. Then you can start getting into things like CEO, CFO buybacks, insider transactions. And you can get into pipelines and biotech. Splits, gains, ratings, upgrades, downgrades. Where's my biotech? I know I got one in here somewhere. Bio research, FDA and pipeline. 10 drugs in the pipeline for a certain stock, and then FDA filings. Costco. I'm a big fan of Costco. Costco is always a good one to look at. Nice spike at the open, faded back down. Oh, it's trying to come up off of that support. Nice, clean, open range. You're all set up for a breakout from an open range breakout. Using expected move on an intraday basis can be tricky. Let's see what the market makers are talking about. The market makers gave it 9. For the week, it's got a $10 move. It's $10 up or $10 down. Percent change on the day, you can see that these options over here, they're doing pretty decent. But man, this is an expensive bugger. $2.50 wide strikes. It's a beast. Step out into the higher time frame, get a little bit of perspective here. It's maintaining this price structure, demonstrating a lot of weakness. So we step back over here. You've got your angular resistance. So one thing that I would do to get some perspective on this is use your regression line. You want to know how far away from the mean it is. Notice the overhead volume. That is going to be a gravity point per se. This orange line is from the price structure that I had drawn last week. We are stretched way beyond the mean on the daily. Let's take it back for the year. Uh-oh, I see Creed came out with his morning funny. Pimpin' ain't easy. So looking at something like this, we would come back and look at something like this. You can see when price pulled too far away from its mean. Think of a rubber band being stretched and pulled, storing up all that energy. When the forces that cause the stretch to happen are no longer there, it snaps sideways action. But we had the same sideways action here. So we are definitely stretched to the edge of the mean. Same here. Pulled too far away, snapped back in the other direction. It's up almost 90 cents. That's 0.3%. I'm not sure where your stop was at. But a lot of swing trades use logic like the structure on the low. So if we stretch this out a little bit, I know we're really zoomed in here, but talking about stops. Swing trade logic, if you go to the old school trading companies like IBD and places like that, and they talk about taking positions with a $15, $20, $30 move, you're going to put a stop somewhere down here. Even if you want to be more aggressive and say you're only taking a $5 or $7 move, you would have had a stop at least under Friday's low. And we haven't even reached that yet. So your aggressive stop, I don't know why they just don't rename stops and call it promised loss. Stops guarantee that you lose. And if you're journaling your trades, you could probably ask, how many good trades was I stopped out of? How many good trades did I lose because of a stop? Especially with options when you can use probability of touch and you can actually determine that price is more likely to touch your stop than it is to hit your target. UNH, United Health Group, one of the conglomerates that are fighting it out right now. The big boys. Stuck perfectly in a range. We're always talking about having a plan. This has built its own plan. And we're looking for a break. We don't have it. So price in UNH came down today and tagged this pivot point. And then it's trying to consolidate. The weakness from Friday could be attributed to this dividend payout. We see that all the time. We see a market having dividends, and on that day, they suffer weakness. But that's a reflection on price rebalancing and has really not a lot to do at all with the valuation in the company or its market internals or what even the technical analysis is talking about on the chart. It's just demonstrating a rebalance. If they're going to give money out, it's what we would expect. What's concerning is after this today, we should have seen a resolution from that. And we don't have it yet. But seeing it stop right at that line is a good thing, showing that it's staying with its technicals. And we would anticipate a resolution of this box. There's no indication of which direction it's going to go. right now, you could literally flip a quarter to get that determination. So if you don't yet have a trade in UNH, the trade setup is formed. You could wait for the break and take a trade. Me, I don't like to wait for the trade to be confirmed. I would rather pick a direction, trade it, and be right or not. With this much consolidation, this engulfing candle is your market compression. This is many days in a row of compression. It's building up energy for a move. When the move comes, it could look very similar to this. See the market compression, engulfing candle, multiple days of compression, explosion. Nothing in nature can be contained forever. The longer you contain it, the more energy it builds up. The volume suggests short-term, mid-term, and long-term uptrend, even with this much sideways action. Got to call out for Roku. You know, when you look at something this completely ugly and just complete mess, when you see something like this, it's okay to say, oh man, what the heck? I have no idea what's going to happen here. It's okay. Just admit it. I know we're not supposed to say such a thing, right? We're supposed to have all the answers, but it's okay to look at a chart and realize that it's been all over the place. So this was your breakout, fake out number 1, fake out, breakout number 2. Massive move down, tried to close the gap and failed, got hung up here at this pivot point, took a soft rejection, and it's taken another rally, it's taken another run at it. The easiest way to get your mind around something that looks as ugly as this is to step out into a higher time frame. Kind of clears it up a little bit. Got a call out from Creed on Facebook. So right now, Roku is sitting at its POC, its point of control. If you're not familiar with volume profiles and TPO, this is bell curve statistics. It's marking out where 68% of all the trade volume was at. And then it's marking out the center of the deviation, the mean, the point of control. All these different volume levels offer support and resistance, and it helps you to see where there are pockets, like air pockets. Think of an airplane falling through an air pocket, catching some lift, stabilizing its turbulence. That's what price will do when it hits these pockets. It will fall through them. There's no resistance there. There's no support. It could go both directions. It'll break right through them. If we was to wipe out all the lines and indicators and just take this down to nothing, make it a lot easier to see. Which is what I recommend whenever you're struggling. Get rid of your indicators. Get rid of everything on the chart. Take it down to pure price action. Start at the beginning. Mark out your pivot points. So now looking at it in this perspective, we had a nice run up last week from Monday all the way to Thursday. Gave it back, found some support at this pivot, and it's making another run. You can see the angle for the overhead resistance. Which it's fighting with right now. Yep, I'm not going to go on my rant again today, but if you're losing more than you're winning, you are not going to find a solution to your problems in another indicator or in another strategy or in another system. Checking the economic news, we've got a revised North America trade deal. Oh, that's not news, that's just the president. The USMCA, formerly known as NAFTA. When you're drawing your support and resistance lines, think about the way that Rose does it, guys, and she's done it again and again, because when I talk about staying consistent in what you do, she is like the gold standard for doing it exactly the same way every time, which is what we want to do. We want to stay consistent, which means if you go back and you watch any of Rose's videos, she performs technical analysis on her charts again and again and again and again. So you don't even have to go find one particular day. You can just pick any of her days and watch the stream. She'll mark out where the buyers and the sellers are at and really gets your attention on looking for what the market is doing. Where are the orders coming from? Where's the flow? And she uses that TPO or volume profile. It can really give you some perspective. Notice also that Thinkorswim has this button right here, Chart Describer. Gives you the close recently crossed above the parabolic SAR. The stochastic full is fell below the oversold levels. Standard deviation price channel. And it gives you the simple moving average. It's giving you some perspective on Roku right there. Now, that was at 9:15 this morning. But still, gives you some analysis. Well, it's right at a pivot point. It's right at this resistance, this angular resistance. And it's taking a rejection there. Rejection, rejection. So far, we don't have a solution. Tony is giving a call out on CLDR. Just had an open range breakout, fake out. I love the open range. I love it, I love it, I love it. Cloudera Incorporated multiple days of market compression, stair-stepping action this morning, nice and clean. And if we steal this line from Friday and we just use it for today's price action, here's our open range, and there is the rejection of the open range breakout. Lots of news on ARQL still. MBIO and SESN. DTIL. Some names that just, you'll continue to see them when you start playing more of the bios. And I got to admit, when it comes to biotechnology stocks, there are a lot of really great trades that we can play with. You can literally just build an entire trade strategy on bio. So let's circle back and see what we had on the list here from the day trade watch list that Lucian had put together over the weekend. Diamond Offshore Drilling, who I've heard about but have not worked for. Beautiful breakout this morning. You guys can say it with me. Thanks, Lucian. That's a hell of a point out. Don't sleep on these lists, guys. All the time I get emails from people saying, I never can find anything to trade. These are energy markets that are just doing amazing. This is a continuation on CPE from Friday's price action. Developed a really clean open range and then broke out of it beautifully. On the swing trade list, wow, front line up 2.5% already. Testing my resistance that I had drawn at the 11.5. Thean's giving a shout out on Shop. Excuse me a second. Shop is one of those that has just really captured my attention this year. You can imagine why. From 2019 at 135, this thing ran up all the way to almost $410. That's an amazing move this year. It's pressing into that resistance that I have drawn, the resistance zone. Notice the strong break above that 376 from a few days ago. This is a perfect example of a bull flag. There's your flagpole, there's your flag, there's your break. Speaking of flagpoles, there's the pole in the NASDAQ. The flag, seriously, way too long. Be looking at that roundy 84.15 to maintain support for a rally up. No love out of the Dow. Coming back down to test that VWAP, it looks like. The Russell leading the way. Here's our bird dog for the day. Notice it's playing by its own rules. Small cap stocks are in control. If we can get this market to find some sink, you could really see an impressive move on the day. Just got to get some agreement between these markets. But for us, it's really good that the small caps are doing great. Most of our markets that we trade here in the day trade room, or that we can afford to day trade, are going to be in the Russell. A beautiful move in shop again. Up 3.75%, building its flag off the pole. Just curious on this. I didn't think so. Gives it a little bit of perspective. Notice that this pivot point got rejected at the roundy and failed to come up and set a new high on the day. It failed to even match the high of the day, indicating weakness. If you step backwards to earlier in the morning, it set a high a day, pulled back to gain some support, validate the new range, broke a new high, and continued up. Set a range, pulled back, broke to a new high. Now we've got a change in market sentiment. The pullback is deeper than we've had previously through the morning, and the rally back up failed to set the high, to even match the high. So we're looking at the very least, a pause in the current trend. We're looking for some consolidation, some verification of this new range, and it needs to break back up and prove that it's going to continue, or else this is looking to come back down. 37450. If it fails to maintain that 786 fib, that would be my target. Always got to have your plan and then your alternate thesis. So if you talk it out, it works a lot better. Just tell yourself, what are you looking to do here? Well, I think it pulled back to gain some support. I'm anticipating a move back up, and I need it to break these two pivot points and set a high higher than this last test. If I don't get that, then perhaps we're no longer in an uptrend and I need to start looking at some other trade. So for the PPS signal, COF is one of those. We've got to go out and make sure that the scanner is working right. Never trust the scanner. And it is working right. You can see that the signal that we got was from yesterday's price action. It's exactly what we want to see. We don't want to see the signal on today's price action. 1035 and 101, or excuse me, and 99 and a quarter. That's the range for the week. In the video that I made teaching the PPS strategy, I added the links for all the PPS tools that I built. So you can get those links when you watch the video. They're in the video description. So far, SPY is working on an inside day contained inside of Friday's price action. And for anybody who already seen, I put out the index trades on SPY, SPX, NDX, QQQ, IWM, and RUT. We don't normally do earnings plays, but I'm kind of interested in putting on an earnings play later in the week. This reports on the 12th after the market, and I would be interested in putting on an iron condor on the 12th. It would be back inside of this box. We can look at the options in Costco, but you got to realize, as I demonstrated last week, that these Greeks aren't real. So you can't get any edge in trying to determine what the market makers are doing when it's so close to earnings. You can see that the market makers are anticipating a move less than this. That's about all you can get out of it. Delta and probability of touch, none of those are going to do you any good for trying to anticipate direction. One, because you can never anticipate what will happen from earnings other than getting vol crushed. But two, like I proved last week, those Greeks aren't real. When the implied volatility expands, so should the expected move. And it doesn't, as I proved. So that means we can't use it to gain any edge. Now you'll have to go back and watch the replay. It takes some time to go through the steps to prove it again. Not really interested in doing that in the morning live stream. I could come on later on today and do it. Looks like Costco wants to take another run at Friday's high. I don't know. I'm going to take a break after I'm done streaming. So sometime before 2 o'clock, because there is a person who's supposed to be streaming at 2 and I don't want to interrupt them. Look at it like this, guys. if you go in to analyze and you use think back and you go to Google, which is what I typically use for the example, and you set Google at January of the year, say January 2, look at their options chain. It reported in the first week of February. So look at the February 1. It's got an expected move of $91. It's got a 38 implied volatility. That was on January 2nd. If I jump 2 weeks forward to the 14th or 16th, the expected move has dropped. So has the distance, the implied volatility, everything so far looks to be fine. But now we're inside that window of 30 days that I talk about when the Greeks are no longer real. Remember these numbers, 24, 45. Jump another week. 28, 39. Wait. You're telling me that the implied volatility went up and the expected move went down? That's not the way it's supposed to work. That's not real Greeks. Let's jump another week. Remember these numbers. 28, 39. 32, 22. Wait. So now you're telling me that the implied volatility went up even more, but the expected move went down? That's not how it works. That is not real. That's what we call second-tiered Greeks. Point proven. I don't have to come back in later on and do it. When the implied volatility average goes up, so does the expected move. That's the way things are supposed to work. When they're not moving that way, it's because they've been manipulated to maintain the theta decay so that, quote, it's easier to hit. How do you like that stuff? Because it's easier, they said. So there's our breakout in Costco from the wedge. 296.25 is what we're going to be looking at for today. Either a rejection or a break above that. Second-tiered Greeks can hurt your head if you get to messing with them too much. It's easier just to avoid them. Recognize that if you're trading something that has earnings in less than 2 weeks, you're playing with Greeks that aren't real. They're not going to move the way that you think they will or the way that they should. When it comes to earnings, you can literally flip a quarter, because if they miss, the market could tank. If they have forward guidance that isn't positive enough, they could tank. If they have great news, but they don't present it in a way that's positive enough, they could tank. There is absolutely no edge in trying to anticipate direction. So the only thing that we can do is play the volatility crush or build a trade that makes money no matter what from the volatility crush. You can see it's got a history of presenting and then getting crushed. That means we can anticipate building a trade that makes money when volatility goes down. Because we can't do anything about what direction it might go or might not go. Investor sentiment cannot be predicted. Now, there are companies who spend all their time and effort on earnings. Places like Earnings Whisperer. So if we go in and see Earnings Whisperer, earnings estimate. Earnings Whisperer number 1.74, consensus 1.70. The estimated consensus. I would like to know. That is awesome news. Thank you. I've been waiting on Webull forever, and I really thought that they would have jumped on the opportunity. Sorry about the spam. It didn't come out the way I had anticipated that. When all the companies went free and challenged Webull's position, I really thought that they were going to jump harder onto their options platform and get it done. For me on Costco, on the 12th, I'm going to look to build an iron condor with Friday's expiration. And I'm going to look for price to maintain this box or whatever current implied volatility level that it has, using probably a 1 deviation strike price selection. So there are companies out there that focus on anticipating earnings, and they make a lot of money, so they must be doing something right. I've gone over to Earnings Whisperer's website as a free member and looked around. I've never had their paid services. But just like Black Box Stocks and Cheddar Flow and TrendSpider, all these companies that have their own niche, Earnings Whisper focuses specifically on earnings. So if earnings plays are the way that you want to make money, you'd probably want to get as much edge as you can. One way to help you get edge would be to understand implied volatility and playing this crush, so that no matter which direction price goes, as long as you get paid from the vol crush, your trade is at least earning that much money. I don't know. You can see here, earnings, here's the day. Average from 2 isn't much of an average. If you count back the last 10 earnings, add all of those moves together and divide it by 10, then you would have an average. That's how you calculate average. Learning how to perform mathematical formulas is going to really help you out when dealing with the marketplace. So if every earnings you was to go in and measure how much it moved, write that down, go to the next one, How much did it move? Write that down. Go to the next one. Do that for 10. Add all of those numbers together, and then divide it by 10, and then you would have an average. Dan's giving a shout out on AMD. You can see that it's stretched way beyond its mean. Even if we was to take it back to the previous peak, still stretched beyond its mean. It set a high, pulled back, made another run, couldn't maintain, even sustain that previous high, pulled back, failed again, and now it's on its way down. Third time's the charm. We also had the open range. $10 a.m. So that was the open range high. Range bound market right there. Wow, social media is blowing up. What is going on? What do we got here? Swing trade bot alerts. BABA hit a 52-week high. VRTX 52-week high. Nice. Oh, MBF, I've called SPY way worse things than that. I'm a little surprised that this 39.5 didn't hold, but it was pre-market, and price can fall right through those support levels. So right now, that's kind of the one I would really watch in AMD. Watch to make sure that that doesn't try to rebuild some support there. Guys, I gotta go get a drink. I'll be right back. All right, I'm back. So it looks like AMD is slowing down in that move. Let's see what is trending out there. Maybe we can get a trade idea. Tesla Shop, Roku, Facebook, Spy, CGC, HD, Netflix. Yeah. Baba. Yep, that's one that was on my list from the weekend when I was doing my weekend review. Baba and Steel. There goes AMD popping up off the low. Didn't make it down to that 9.5 that I was looking at, but